whenever you go for an IPO or you want to invest in an IPO, the key factor is that don't go by the market sentiment or mouth to mouth publicity. Because it says okay, this IPO is very good, you just invest in this IPO. No, that is not the right approach. Because then you land up in something and then you start blaming that okay, this is not the correct picture and you are not aware of this, all those stuff. So when you go for an IPO, you have to analyze the offer document because all the information, because this is now a disclosure regime. Wherever if there is any litigations or which is going on, as per the SEBI requirement, they have to disclose everything in the offer document. So then it's an investor call whether to take an informed decision whether to invest in an IPO or not. Because nobody will stop that IPO. It's you or an investor has to take a call to whether to invest in that IPO or not after doing all the research and going through the basic chapters of an IPO or a DRHP, wherein they state what are the risk factors, which was earlier slides, what is the business of the company, where the company stands in case of its peer. So these are all things that needs to be looked into. Then this is a research report. So when you go for an IPO, they put something like a research report where they states that a hello.
Hello, Harshad, we can hear you.
Okay, okay. I thought I was not being audible. So then you need to understand the research report because they publish that who are the research report, from where basis they are claiming that they are the number one or they are the leading in this particular industry. Then the ROC filing made by the company's inspection. So what are the ROC filings? So as a, because till now the company was an unlisted company, so they have to comply with the normal regulations of Companies Act. So whether the company has done all the filings with the ROC, because being a unlisted company, they have to comply with the ROC as per the Companies Act requirements. So what are documents they have submitted, what are the memorandum articles, you can go through that. So that if there are any lapses in that kind of thing, so you can understand what is the history of the company, how the corporate filings they are doing, what are the corporate governance requirement that they do. Then minutes of the meetings and the shareholder of the issuer is the one that you need to analyze. Then industry report, yes, what I was referring to, industry report is basically how the industry is performing and how this company is performing. Because there are various companies and various different model for a different company. So you have to refer to that industry report, which is already there in the offer document. You have to just go through that report wherein they will compare themselves with the other peers so that you will have a fair idea. Like suppose if you see the airline industry, now as all we know that airline industry is not that great industry because the fuel cost and everything is so great in that industry. So if this company is doing very substantially good, so we need to understand what is the difference between this company and other company. Like suppose we have a Jet Airways, we have a Indigo, we have a Spice Jet. So all you know, this kind of companies are very high debt companies. And if suppose now Jet comes for an IPO, you need to think, understand whether how they are comparing themselves with the other peers and where they are standing. So those all things you will come to know in the industry report. When you go through that report in the offer document, you will come to know okay, how they are placing themselves with others. So that give you a fair idea whether to invest in this IPO or not. Same way if you go for a pharma companies also. Right now there is a boom for the pharma companies. So you have to understand in which segment they are into, what kind of business they are doing, what kind of analysis they are doing, and how they stand different from the other peers. Then there is one collaboration shareholder agreements. Now, as you know, there are various tech companies or startup companies which are coming up. So in those companies, you will find whether P like foreign investors or investors who are various major investors in those companies. So they would have some agreements, which is called as shareholder agreements. Because before listing, they would have invested in the company to get the funding for those companies. So they would have some say in the company. So what are those says? So there are there any some agreements which have some restrictive rights, which should not be because as per IPO norms, there should not be any restrictive rights or a tag along rights in case of an IPO once it gets listed, because every shareholder would treat it as a par with other shareholders. So the shareholder or a PE investor should not have any different power other than what the other normal shareholder has. So all the rights should go away. What are the collaboration agreements? That also will be there in the offer document. So it is covered in the history chapter. So when you go through an offer document, you can find out these agreements in a history chapter, wherein they will give all this collaboration. Like suppose they have some collaboration with foreign entities, wherein they will be paying some royalties to them, or technologically know how payment would be there, or there will be some understanding between them. Those all can be seen in this collaboration agreement. Then you have credit rating. Yes. Now, if suppose they are raising fund through debt also, debt private placement or something, whether they have taken some credit rating. So, what is the credit rating, or what credit rating has given them rating? So that all will define, or will also will be there in that offer document. And third party report certification on project. So if company is into infrastructure company, then they will have to publish what are the reports, what are the completed projects, how many are ongoing. So from that, you will get a sense of what kind of buildings they are constructing, or what kind of construction work they are doing, whether they are doing for private parties or whether they are doing for the government organization. So that all will depend upon this report. Then you have a techno-economy viable report. So if you go for a Google search and see all whether the company is doing great or not. So this all research needs to be done before investing in IPO. Just not that by any say, like any tips that you get, okay, this company is doing very well or this company is very good, just invest in IPO without knowing all these factors. Because once you invest and then it's fall down, then there will be a UN cry that I have paid so much earnest, because it's your earnest money that you invest in an IPO, and it would be right that you know all this information before putting this into an information. So offer documents are generally available. Sorry, you can scroll down. Just referring to the offer documents are generally available on SEBI website. Whenever the offer documents are filed, it is posted on the SEBI website as well as on the exchanges website. It is there. It is available in the public domain. And also the company has to post this offer document on their website, as well as the merchant bankers who are involved in this IPO need to host the offer document in their websites. So you can find all this offer document freely available on the website, or you can do a Google search also, you will get a offer. Now these are the types, like types of issues. So in IPO, what is the mode of price discovery? So first is fixed price. So as the name suggests, fixed price means basically the price is already fixed, 10 rupees, 15 rupees, or 100 rupees, 150 rupees. So that price is fixed. Now the second type is book build issue. Now in case of generally a main board companies like which are raising a fund from 100 crores to 5,000 crores or 6,000 crores, generally go for an book build issue. Wherein in case of a small company like SME companies, what we have generally seen, if they go for a fixed price issue because they know, okay, how much they have to raise and they are pretty clear. So that is fixed price issue. We have seen very rare main board company coming out with a fixed price issue. Now, in case of book build issue, what typically book build means, there will be a range, like there will be a two price point given, and in that price point, you can bid in an IPO. Now, for example, I give you 100 to 105. This is a price range. So, lower price would be 100 and the upper end would be 105. So, from 100, 101, 102, 103, 104, 105, you can bid at any price point depending upon your say that how much price you want to pay for this and I. So that is a book building concept, which is that wherein there will be a range will be given, and in that you need to bid in a particular IPO when the IPO is on. Next slide, please. Yeah. So now how the price is discovered for the share in the public offering. In case of fixed price issue, is very pretty clear, because you know that it is already fixed by merchant banker. The price is already fixed. In the offer document is already clearly printed that this could be the price. And the rationale is given it's in a basis of price, wherein they will give you what is the P ratio, how they are determined, and what is the book value they are referring to and why this price is there. So that is how it is fixed price. Then price discovery. So here the price discovery is basically in case of so here it's referring to fixed price. So where you can find the fixed price issue is basically you see the offer document. In that you can see this screenshot over there where it is mentioned at a price of 105. So it's clearly pretty clear okay, what is the price. So there is no ambiguity at what price you need to put. You have to put on 105 only. Yeah. So now price discovery in a book building. So company may offer a maximum 20% price band, which one can bid for. So what I said the example like 100 to 105. So maximum it can be 100 to 120. It would be a price band. So in each price point, you can have a option to bid. So generally, in a recent IPO, what we have seen is basically they give a price range of gap of 5 rupees or maximum 10 rupees. Or in some cases, there would be a 1 rupee gap also, so like 100 and 101. There can be two price points. Or there can be from 101 to 105 or 105 to 106. So, so typically they have a 20% gap, which they can generally use. But generally, normally in every IPO, if you have seen or if you are tracking the market, you can see there will be a 5-10 rupees gap, not more than that basically in every IPO. Then just issue price discovered on demand. So it's basically how the price get determined. Is basically now if suppose the issue size is of 100 crores and the price band is given from 100 to 105. So what typically it will go in a descending order. We'll see first 105 how many bids I received. If suppose at 105 price point, if I got 100 crores or more, then my price discovered would be 100 crores, 105. Because at 105 price point, whatever the ask of the company was there, they already received it. So the price will be fixed at 105. Now we'll take a little more example. If suppose I have to raise 100 crores. Now at 105, I got 90 crores. So then I will go for 104 crore. Now 100 at 104 crore. At 104 price point, I got 10. So now bucket is 90 and 10. So 100 over. So in that case, 104 would be my price discovered, wherein the allotment will be done. So whatever the public have bidded below 104 will all get rejected because they are below the cutoff price, which is 104. So it will go down. Whenever the full bucket will be closed, at that time would be the price discovery. In this case, in case of a book building issue. Yeah. Can you scroll down? Yeah. So this is a stages. Generally, so it's a book running. So how the pricing is determined is basically a demand, which I just give you an example. So during an IPO, basically you bid for the money. Then for a retail investors, there is an option to bid at cutoff price. Now what I mean by cutoff price is basically a price at which a general, now in case it can be 105, it can be 104, it can be 103, it can be 101. So cutoff price means at what price the bucket is full, at that price I am ready to pay. So that is a cutoff price which is available to a retail individual investor. But for others, you can directly have a price point, whatever they want to bid, like HNI category, QIB category, they can bid in a whatever they want to bid. And if the price is finally discovered, so whatever the unsuccessful bidder, as I said, will the money will unblock in their account. So here there is some example which is given. So the price band is 20 and the floor price and maximum is 24. So total available issue size is 3,000 shares. So company we did. So this is how it get determined. So 24 only 500 shares get it. Then at 23,000, at 22 1,500. So all sum up to 3,000. So 22 is the price which would be discovered in this case. So likewise it will go down, down, down. Wherever it will be exhausted full quantity, you will get that price will be fixed. Yeah. Just scroll down. Yeah. So difference between book bidding fixed price, as the price of the security is not known to the investor well in advance because the price is fluctuating. So you have to wait till the time the company will say, okay, this is the final price. So after the closure of the issue, the RT will work upon the price. They will weed out all the rejection cases, and then they will finalize one price. So that you will come to know later stage. But at fixed price, it's already known to the investor because it's already there in the process and it is already given in the offer doc. Okay, this would be the price. So price is fixed in the process only receipt and which I already explained to you what is the cutoff price mean. Yeah, and we can move to the next slide. So this is a normal process wherein the entire process how it works. So issuer will appoint a SEBI register intermediary as a syndicate member. Then there will be a due diligence process. So lead manager will file a draft of a document with SEBI and the stock exchange. Then both the exchanges as well as SEBI will review the offer document and will give them a in principle. So the stock exchange will issue an in principle approval and SEBI will give their final observation. Once that is done, the company has a time of 12 months to open the issue. So as per the market approach or how the markets are moving, the company will open an issue. So it will all depend upon the market sentiments, how it is determined. If they find that it is very good for an investor at that point of time, then they will open the issue. So once they determine to issue open, they will give a issue price and file a prospectus with ROC. Then there will be issue open. So once the issue is open, then they will submit an form. Basically, when the time of issue opening, there is the application form which is being printed and given to all the brokers. So brokers can get those forms and get it filled from the individuals who are willing to participate in the offer and then IPO. Or as we seen in the earlier slide, like if you have a three parties this thing connectivity, wherein you can go to the bank, you have a connection with DPID client, and then you can only bid through that also. So that individual can also do on its own, or you can download the form from the exchange website also. So if you're not getting any form from the broker, you can download that form from the exchanges website, both the exchanges. You can fill that form and you can go to any bank nearby who is authorized for an IPO, and you can submit and do the bidding process. Once the issue get closed, so issue will open for 3 days. Maximum it can open for 10 days. And if there is any revision price, so in a 3 days, they come they come to know that the subscription is very low and there is no demand as such. So they have option to revise the price. So suppose they have fixed some price band, they can lower it down because at that price no one is ready to bid in the offer document. So if they revise the price, then again it will open for another 3 days, but maximum it can go beyond 10 days. So this is the issue closed. Once that is closed, then the other formalities are there. Yeah, you can. The same with the process remains the same in case of book building. Just that in case of book building, prior to opening of the issue, they have to file an advertisement 2 days prior to the opening of issue, an advertisement in the newspaper, giving the price band. Rest the process remains the same, whether it is a fixed price issue or a book build issue. Yeah, you can scroll down. So this is a sample forms which you can refer to. So this is what the form which I was referring to. So these forms are also available on the exchange website, as well as these forms are you can get it from the brokers who are there, and then you can fill it and you can submit this to the bank. Yeah. So these are all the sample forms which you can see on the website, when the dates and everything. So this is the option. So sorry. Yeah, so you can refer to this. So there are three options that can be given. So at various price point, if you want to bid in a one form, you can do that. then amount will get blocked. For retail is basically an ASBA process wherein you have to bid through UPI mechanism up to 2 lakh. It will get blocked, not debited. Once you are getting the finalized the bid, then you will get the allotment and your money will be blocked or deducted from the account. Otherwise, your money will be unfreezed. Yeah. So this is the online mode. I think you can download it from our website. So this is a sample form. You can go and you can check on our website also. Same way with respect to UPI. If you are bidding through an UPI, there is a mandate which comes. So you have to have those apps on your phone like Bheem app or Google Pay app. Once you have all those apps, you can fill an application form. You can have to register yourself. When you do that, it will go to NCPI and you will have again a confirmation from them which you have to accept. Once you accept the mandate, you will be bidding in an IPO. Then your funds will be blocked. Yeah, you can go to the next slide. So this is through the stockbroker or a confirmation. Yeah, you can just scroll down. Yeah, so now this is the crucial part: allotment, intimation, transfer of fund, debit, credit of fund. So basis of allotment finalized by the company, the lead manager, registrar, to issue and the stock exchanges. So here basically what happens is any one stock exchange, has to be act as a designated stock exchange. So either we or a BSC will act as a designated stock exchange. So who would be the designated stock exchange? There the RTA has to give the details with respect to the various price point, and based on that, they'll give us the final this thing. Once they will give the final certificates and everything and a file that these are the valid applications to whom the allotment can be done. Now, if in case if the issue is oversubscribed, like 10 times, 15 times of what it is, then in that case, there would be a draw of lots because we can't give to all the shareholders to all of them. In that case, there will be a draw of lots. So once the draw of lot is carried, the lucky numbers will be drawn by the exchanges, and they will be giving it to the shareholders, and then the allotment will be done. So that all be determined by the RTA and the exchanges. Post that, the intimation will be given by the depositories to all the shareholders to whom the allotment has been done through SMS or and then there will be a fund blocking. So those who have got the allotment, their funds will be blocked, and those who have not got the allotment, their fund will be refunded back. Yeah, can we move to next slide? Yeah, I think this is so. This is basically a issue opening date and allotment date. You can see. So it's already given in the document. Even to be so, it's a T+6 timeline. So once the issue get closed, from that the third day is the basis day, and post that the sixth day would be the listing date. So these dates can be seen on the website. Yeah. So this is the illustration for doing the basis of allotment, wherein this is a retail category, wherein you can see the first is 75, then in multiple of that 75, 150, 225, 300, then 375. So this is a multiple of 75. So you can bid for one lot. So one lot means 75 in this case, depending upon the price. 195. So it would be determined what would be the price, and because 10 to 15,000 should be the minimum this thing, and maximum for retail is 2 lakhs. So 975 into 195 own cross 2 lakhs. So this is how the lot is determined. Then based on that, how many applications are received. So each application, that you can see the third column, that number of application received. Then it should be a total percentage to the total. Then total number of applications are applied. How many applications are there? Then how many shares are available? So once that ratio will determine, based on that, on each category, there will be a draw, because we can't give everyone every share in this case because it's highly oversubscribed. So in that case, the ratio will be determined, that you can see 6 is to 197. So that ratio will be determined. So every 6 from 197 will be drawn. Based on that, those numbers of allotment will be done, and to those the shares would be allotted. So this is how the allotment is done in the case of retail category. So this is a status. Once you get, you can go and check the status. In online facilities are there at RTA websites. You can go and check. You can put your numbers whether you have got the allotment or not. Yeah, you can just scroll down, or you can contact RTA immediately once it is done. Yeah, I think this is email which is gone. Registration. Or yeah, you can go and check here in RTA website how it is given. So you can just refer to that. I think this is again the same thing. Yeah, so this is the crucial one, that not to deal the black market or gray market, because before an IPO you get the hints that what are the gray markets price and everything, and then you invest in an IPO. So this is what we typically suggest everyone. Okay, don't go by the market sentiments. You need to go through the offer document thoroughly and then take an informed decision before investing in an IPO. Yeah, we can move to the next. Yeah, I think we're done with this.
Thank you so
So
much,
any
Harshad,
questions?
for this presentation of yours. It was a good presentation, and I hope all our participants have understood well as to what are the measures that you need to take before applying for an IPO. What are the post IPO things that you would receive from Nsdl or from the company or from stock exchange. So we have tried to explain many things in terms of what are the things. There are some queries which investors have asked. So let me go through the questions that have come up for this presentation. So Abhijit Kumar has asked, what are HNIs in IPOs, criteria to become HNI investors? So Harshad, you would be taking this?
Yeah. So in this case, see, generally HNI is basically high net worth individuals. So there is no criteria as such. So if you bid in an IPO for more than 2 lakh rupees, because 2 lakh is for retail, and if you bid for more like 2 lakh in an IPO, you will be categorized as an HNI.
Aniruddha has asked a question, from where can we get this offer document or that red herring document? So
Yes,
Aniruddha,
I think
basically,
for that
yeah,
you have given the answer. You can
yeah,
get it from the SEBI
yes,
website, or you can, because all the intermediaries have to host the offer document on their website. So be it company can go to their website, you will find that, or on SEBI website, yes, you can go and find that. On exchanges website also you can find, and on the merchant banker website also you can. So it
yeah.
is easily available on the all the intermediaries who are involved.
Aniruddha has asked one more question, from where can we check the list of past and upcoming IPOs or FPOs or bonuses? So
For what?
again, from where can we check the list of past and upcoming IPOs or FPOs or bonuses? So Anuruddha, basically to answer your question, you can get it from SEBI website. So SEBI displays, all such information about the past IPOs, about the upcoming IPOs on SEBI website. It is also available on the stock exchange websites as well. So you can go through the websites or the companies, that are going to come up with IPOs. Even that information is readily available on authentic websites of that particular companies. So these information are easily available on public domain. So you can go to SEBI's website or to exchanges website to get this information. So, Anuradha has, you had mentioned about the record date. What is the record date? Anuradha, record date is basically a date which is, a cutoff date sort of thing. So, for example, if say Reliance wants to issue bonus shares, and the record date, say example, they for bonus shares would be, say example, 25th April. So, shareholders, as on till 25th April, whoever are the shareholders, they would be eligible to receive bonus as what in the particular ratio that the company is deciding. So record date is basically the cutoff date, or the cutoff date for the shareholders that they are into. So as I told you, you have to be a shareholder as on the record date to receive the bonus or any other rights issue that companies coming up with, or the dividend that the company is issuing. So record date is basically the date. As on the particular date, you have to be a shareholder of the particular company. For example, you have the record date was 25th April, but you sold shares on 22nd April. Example. So you don't become a shareholder of the particular company as on 25th April unless you buy it again. Okay, so in case if you are not a shareholder as on record date, then you wouldn't be eligible for that particular, bonus or rights issue or dividend, whichever the company is offering. Anuradha again, once again, has asked, what is the size of the offer document or this red herring document? Harshad, can you answer this?
The size in terms of what exactly?
Okay,
The
so
pages you are referring to, or what exactly, or the downloadable size?
maybe Anuradha can just unmute herself and let us know what exactly is the question. Anuradha, can you unmute
So in
yourself
case,
and
so
ask
I
your
just
question?
answer all three. You
Yeah,
can
I
go
was
ahead.
asking that what are the contents of this of a document, and what are the things present in the document?
So content is already, I think, in the presentation you have shown. Okay, what would be the content? And the roughly, if suppose it's a main board company, it will run through 500, 600 pages. And for downloadable size, it will be around 6 to 7 MB or more than that, 11, 12 MB, depending on the number of size of papers that they have. And what are the contents? I think it is standard content which are given by the SEBI prescribed format itself. So every offer document will have a same standard index, and the contents will differ depending upon the company to company, but the index will remain the same. So you can find the location will be the same.
So Anuradha, you have asked one more question about the Paytm came up with an IPO, but its shares went down. How and when can one analyze before applying for an IPO whether it will be profitable or not just by going through the document? How can we analyze? So, Anuradha, basically to answer your question, see, as we had explained in the presentation of ours, please don't go on any rumors first that the company is going up with 10, maybe it may get listed maybe 5 times higher than the issue price or 10 times higher than the issue price. You will have to take your own decision. You will have to analyze by reading the offer documents. You'll have to analyze by reading the by going to the company's website and seeing what the company is all into. You will have to check the balance sheets, the cash flow statements. Are they in the positive, or are there the statements, the finances healthy enough for you for them to run the company? What is the objective of that company getting listed or coming up with an IPO? So these are some of the things that you will have to look into. Are there any, as we told, are there any corporate governances or any lapses or any legal issues being faced by the company? So if there is such case, then it's better to avoid such IPO. But if the company is in good condition, it's in good health, then I think you can go for applying for an IPO. Uh, that's the answer. Harshad, you would like to add anything to that?
No, I think you're pretty well done.
Okay. So Manish has asked, can you explain what is due diligence again? So Harshad, can you take this? Due diligence. He wants to know, Manish wants to know what is diligence.
So due diligence is basically in an IPO, you are aware there are merchant bankers involved. So merchant banker are basically a SEBI registered merchant banker who have got the license from the SEBI to act as an merchant banker in IPO. So they have to perform a due diligence before hitting the market. So they will do a due diligence in terms of how the company is, what are the disclosures that we are referring to are adequately disclosed, because as we rightly said, it's a disclosure regime. So then there is a way in which it is disclosed or not, the risk factors are disclosed properly or not. So those are not due diligence from whether the company has done any compliances, non-compliances, what are those, are there any litigations which needs to be properly disclosed in the offer document. So all these things are done by the due diligence by the merchant bank. So this is what the due diligence means.
So Anuradha has asked one more question. So if the record date is 25th April and if we buy it share on 25th April, will we get bonus? So Anuradha, basically, one is you will get as an EOD if you know your the shareholder as on the particular date, record date, you are eligible to receive the bonus. M. Kumar has asked, allotment is a problem in IPOs. Uh, is there any thumb rule or technique to ensure better allotment, especially when oversubscription happens? How do we know? So, M. Kumar, basically, there is no such, technique that to get an allotment, else everyone would be rich enough, getting all the shares. But there is no technique. It's as we know that it's on a random basis that allotment does happen, and you need to apply if you think that the company is going to get listed on a higher price. You can, after doing due diligence or after doing proper research, you can apply for an IPO. Alok Kumar has asked how much money is needed in bank account for IPO if the listing price is 20. Alok, I really didn't understand. Harshad, did you understand this question? So, Alok, if you can just unmute yourself and ask your question. Okay, I think Alok is not there. Alok, we require more explanation on your question as well. So, as we told that,
So basically, what I
yeah.
understand from his question is how much money is in bank account after the listing price is 20. So it's depend for an how much lot you are applying for. So for generally for one lot you have to keep minimum 15 to 20,000. 15,000 is max. So that amount you need to be there in your IP if you're applying for one lot. If you're going for beyond that, if you're a retail investor, you want to apply for 2 lakh, then that much amount should be there in your account. Otherwise, it will get rejected with insufficient of funds. It will all depend how much you are applying. Based on that, the funding should be there in your.
So M. Kumar has asked another question. Also, money gets debited from banks and FDs have to be broken in ASBA and lien taken. Instead, SEBI plus banks must break FDs only after allotment on specific number of shares. So M Kumar, basically, as we told, if you have money to invest, then it's a better way to rather than breaking FDs and investing, is what I understand from your question. But if you have money to invest, then you need to invest. Else, it's better to avoid investing if you have to break FDs, because it's ultimately your money. You're going to generate profit or loss, and you're going to do the due diligence. So that's how you need to take care before even investing. After breaking FDs, there is no allotment most of the times. M. Kumar, as we have told that allotment is done on a random basis. There is no specific rule or thumb rule that you will get. So you need to take that risk if you are applying for an IPO. This is something SEBI and FM needs to regulate. Okay, can I apply in an IPO for multiple demat accounts, Abhijit? So Abhijit, basically, you can apply for through one PAN up to 2 lakh rupees. If you're a retail investor, up to 2 lakh, you can invest. But above 2 lakh, you cannot invest. So you can apply, of course, invest through multiple. If you have multiple demat accounts, but one PAN, then maximum 2 lakhs is what you can invest in.
Yeah, so if you're applying from different account and the PAN is same, then it can be treated as multiple bids and it can get rejected as a technical. So you have to be mindful for that.
So any more questions, participants? Please do mention that in the chat box. We wait for 2 more minutes and then we can close down this session. Okay, so please come up with more such sessions for beginners like basics of investment stock market. So Anuradha, basically we do sessions every Thursday, Fridays, and many Thursdays. So you can get the list. I'll just share the link from where you can register for our webinars. It's a free of cost webinars for all our investors. So we have a schedule put up on our website. You can go and you can register. So we, in our forthcoming webinars, we'll be talking about the basics of insurance as well. And we are also talking about on 28th of April, we are talking about investing in mutual funds. Why and how for retail investors. So this is the subject on which we would be talking about. So as I told you, this is the link that I've posted in the chat box. You can get all information through this link. It's a free registration that you need to put in certain details and register for yourself for getting the webinar link, and you can attend the same. Alok has asked how many days an IPO remains open for public. So Harshad, can you take this?
Yeah, so generally it remains for 3 days, which I told in my presentation also. And maximum it can be open for 10 days. And if it is for 3 days, then if there is some price revision or there is some force majeure happening somewhere, then it can be a further extended for another 3 days. But the maximum it can open for its 10 days.
Okay. Thank you so much. I think all the okay. So Anuradha has asked what is the role of Nsdl. So Anuradha, to explain the role of Nsdl, basically Nsdl is a depository. So whenever your shares are being held in electronic form with a depository participant of Nsdl, but ultimately your shares are being held with a depository in electronic form. So we are the basically to understand we are the record keepers of all the securities in demat form. So for example, if you are investing into say equity shares or government securities, bonds, preference shares, all these securities are being held in demat form. So we are as a depository, are being we hold the shares in electronic form. To give some statistics, we have more than 2 crore investors, like 2.67 crore investors as on date, whose value of shares that we are holding is more than 300 lakh crore. Now this is more than even the bank deposits in India, and almost like crossing the GDP of India as well. So this is a huge figure, and NACL's part is to keep the records safe in its custody in electronic form. Uh, as I told you before, the depository coming into place, there were many issues like fake certificates, bad deliveries. Example, if you had a share certificate, and in case of if there were rains, or if the house were flooded due to the rains, so the share certificates would have got torn, or many other things would have got stolen. So there were many other issues before depository coming into place, because of which it was really needed that depository, the share certificate would have been kept in electronic form, and that's how the depository came into place in the year 1996. NSL was started its operation in the year 1996. We are the first depository in India and one of the world's largest depositories. And that's how we have more than 300 lakh crore investors. Our custody value is around 90% of the market share. So these are some of the statistics that are being with us. In fact, this year 25, we celebrate 25 years of our service. So it's a achievement because of all our investors that we have achieved this great milestone. And we thank all our investors for this as well. So NSDL, as I told you, we explains more of a depository role, keeping shares in electronic form. So in case whenever your shares are being held in demat form, it is being held with NSDL or the other depository. So with this, I think we can come to an end of our webinar. As I told you, we have many more webinars in our coming days. The details, the link I have shared in the chat box. You can go to the link on NSDL website and register for the upcoming webinars. Also, you would be receiving an email from NSDL in a day or two. So please request everyone to give your feedback on how did you like this webinar. In case if you have any other suggestions on any other topic that you would like NSDL or NSE to take, please do mention that in your suggestions or your feedback, and we would be happy to take it forward. With this, I come to the end of the webinar. But before closing, I would like to thank Harshad Darod from NSE, who explained it very beautifully to all our investors, to all our participants about IPO as well. And thank you, Harshad, once again for joining with us on
Yeah, thank you.
this
Thank
webinar.
you to you also.
Thank you so much, participants.
Thank you.
And we come to the end of the webinar. Thank you so much.